Hey, what's up? A lot of you guys have been asking me, okay, what's my TradingView setup? What are the indicators that I use? So this video will go over exactly that. I will show you how I set up my TradingView for longer term investing and yield farming. And it's a little bit different from a trading setup. So if you're struggling with which indicators to use, then this video could kind of like tie some things together and help you develop your own strategies to make better investment decisions. If you're new here, my name is Richard. I'm a yield farmer and investor. You can see my portfolio update here if you want to dive deeper into my portfolio, but I've done decently well for myself thanks to yield farming and being much more intentional with my investing. But hopefully this video kind of gives you a little bit of a closer insight about what I use for the charts and why I set up my charts this way. So let's go over the exact indicators here. And again, this is not financial advice. I'm just sharing what I use, and you can decide whether you want to use it or not. And I try to keep my technical analysis pretty simple here. I don't use like 100 different indicators. The major one I use are the exponential moving averages and the triple simple moving average. So if you go to indicators, there's a bunch of different ones that I like, right? But the main one is the triple moving average. And these are my settings. So 50, 100, and 200. And the reason why I use it is because a lot of investors and traders do use these moving averages to make their decisions. I want to know what other people are thinking in the market. For example, okay, it's bouncing off this area. Maybe that's a good sign, right? If it's closing above this moving average, or if it's cracking below, maybe a lot of investors are fearful. I kind of use it to gauge these are what other investors are thinking. Then I can position myself to either go with the flow or to counter the consensus, right? If I want to take like a more contrarian view and a more contrarian positioning. So those are the key moving averages that I use. And then what I use also is the MACD. And you guys could go to like Investopedia and look up these indicators, read more about it. I won't go into too much detail here about these indicators, but what it is basically a momentum indicator, right? When there's like a huge red here, it means that there's just a lot of negative momentum. And then when it's green, it means that there's a lot of positive momentum, right? When there's a lot of positive momentum, that's when I want to be looking to sell rather than to buy. And then when there are a lot of negative momentum, that's when I'm looking to buy, right? So we kind of want to like do the reverse of what a lot of people do. When assets are pumping, a lot of people are looking at, okay, which assets should I buy, right? But what I'm actually doing is, okay, like what's my sell target? And then like, how do I actually like execute my selling, right? And what I use also is the RSI, which is the relative strength indicator. And again, you can go to Investopedia, look it up. The explanation is much better than what I can give you. But what it actually shows you is the strength of a token. And the stronger the token, the more likely that the investors that are in profit are going to sell, right? Especially when there is a negative market outlook. Those investors that are actually sitting in really nice profit starts to lock in those profit. They don't want to take the risk of a big drawdown. So then the higher the RSI, the more likely that the prices are going to retrace. And I use a 25 period RSI here to reduce some of the noise and to make it more suitable for longer term investing. Again, I don't position myself for what's going to happen in the next like few weeks. I try to position myself for the big moves. If there are big moves happening in the market, I could basically capture that gain, right? For example, if Ethereum just moves sideways for a couple of months, I could just sit on my hands and not do much. If Ethereum goes down by quite a lot, I could be making buying decisions, right? But if Ethereum does go up by quite a lot as well, I could be making selling decisions. So I can respond to exactly what the indicators tell me, what the price is at the moment, and my portfolio at the moment. And again, this is really useful, especially if you guys reduce some of the noise. And the default is like 14. And if I change that, you can see there's some slight differences, right? It's just a little bit more noise here, but with the 25 period, it's kind of like smoothing everything out. And it's a stronger indicator, especially when it's overbought. So now that you guys know the basic setup, how do I actually use these indicators? Well, the first thing is the exponential moving average. The light blue is the time period and the dark blue is the 20 period. And the main difference between exponential and simple is that exponential takes much more of the recent data into account. So it's more sensitive and it moves faster than the simple moving average, right? What I like to use for these two is I want to see if the price is kind of like surfing the moving average, right? If you see here, it's kind of like surfing above that. It shows me a sign of strength. Strong crypto tokens or strong stocks that surf these two moving averages tend to be the market leaders. If it's cracking down and like basically getting rejected off of these two moving averages, it means that the price action is very weak, right? Which was what we saw in Ethereum's price action in the last couple of months. If it's grinding sideways, then it's not telling me much. But when the token is trending, this is a really good sign to see, okay, this trend is actually quite strong if it's bouncing off of these two. And then those other moving averages could act as a zone of dynamic support or dynamic resistance as well. You can see that initially it did surf these two moving averages. It wicked down, but bounced off of this 100-day simple moving average, right? So this is a slower moving average. It provides a zone of support. And a lot of people do make buying decisions based on these moving average. And what I like to do as well is I like to dive deeper into like the price action of the particular asset. For example, the price action of Ethereum could be very different from the price action of Bitcoin, right? You can see for Ethereum on the daily chart, sometimes it just doesn't respect this 50 period simple moving average that much. The 100-day seems to be a much stronger support. And then when these moving averages became a zone of resistance, then it could put a lot of downward price pressure on Ethereum, right? And you can see when the price action is really strong in the last cycle, it did bounce off of these moving averages here. And when it started to become weaker, it would bounce on this like 200-day simple moving average, right? And we can look at other examples as well. For example, Solana right now is bouncing off of these key moving averages. And in the last couple of weeks, Solana has actually been really strong. I did mark this breakout here that basically saw, because we basically saw like an ascending triangle pattern, right? You're seeing the price consolidate here, squeezing at the top of the range. Buyers are stepping in, and then you're not getting that wick down below, right? And then again, it's surfing these key moving averages, especially the more sensitive one, which shows a lot of strength. And then right now it's in the process of breaking out. If you see the last run up to around like $260, the price didn't really show any weakness until these two moving average became a zone of resistance, right? Of course, nothing is 100%. It could go up and then go down and then go back up again, ultimately to put a larger downward pressure, right? And again, on the flip side, if this is acting as a zone of resistance, then it means that the price action is pretty weak. And then what I like to also look out for is the moving average crosses. If the 10 period exponential moving average is crossing over the 20-day EMA, then you can see that a reversal might be in play, because the only way these two would cross is the price actually started moving sideways instead of trending down or potentially even moving upwards, right? And surely enough, we did see that cross. And then another stronger sustained move is the 20 period exponential moving average crossing over this 50-day SMA here. So a big cross here, and the price did sustain above that for a while. We did see a cross back down and then another higher push upward. But the only way these two moving averages are going to cross is when the price is kind of starting to reverse, right? So that's a simple signal I like to look at. And you guys can look at that at the weekly chart as well, right? When it's surfing these two moving averages, the price action is really strong. Maybe it's not as clear on Solana as it is on Ethereum. You can see when it's trading above these two key moving averages, the prices are really strong. And that's exactly what I like to see for stronger tokens. And we can use this concept for like the relative strength charts as well, or the dominance charts. For example, for Bitcoin dominance, on the weekly chart, you can see Bitcoin has been really, really strong throughout this whole cycle. It was like a false breakdown here. We didn't get that initial cross, right? But you can see this shows us a great sign of strength for Bitcoin. But then in the last couple of weeks, we did see a pretty big shift here where like the 10 period and the 20 period crosses. Again, we're on the weekly chart. And then this also flips as a zone of resistance. So it means that a lot of investors are buying altcoins instead of Bitcoin. And a lot of Bitcoin investors have started to rotate into altcoins, right? So this is a lot of important information, especially when this 20 period EMA on the weekly chart start to cross here. That's a sign and signal of a sustained move. We have not seen that cross at all this cycle, right? In the last cycle, we did get like a false breakdown here. There was a cross, but then this was a false breakdown because Ethereum was not close to its all-time high yet. It hasn't broken out. And then Bitcoin catches up as well to Ethereum. And then we finally see another cross here that led to the altcoin season. So that's the cross that I like to look for. And it's really powerful in my opinion because it shows us a more objective, sustained move. And for longer term investing and yield farming and trying to see where the market is going, I like to stick to like the higher time frame charts, the weekly chart and the monthly chart, just because on the daily chart, the 4-hour chart, the hourly chart, there's just too much information and noise, right? The way it works is that the monthly chart is the strongest, then the weekly chart, then the daily chart, because a lot of the longer in term investors that have a lot of capital, they're actually looking at the longer time frame charts, right? When people are making like huge shifts in their portfolio allocation, they're not going to be looking at the daily chart or the 4-hour chart to make decisions. Most of the time, people that have been around for a while, they're looking at the monthly and the weekly chart to take like really strong signals seriously rather than like the daily chart. So we can see, for example, for Bitcoin dominance, we see a MACD cross here on Bitcoin dominance, which means that momentum is shifting bearish. You can see this histogram as well is starting to turn red. And if we see a big wave downward like this, it probably means that we're already deep into altcoin season, right? And then when we're deep into altcoin season, we could consider realizing some of our altcoin profits either into like stable coins, into Bitcoin, into Ethereum, and whatever asset that you want to hold long term and kind of de-risk our assets a little bit, right? And then again, the RSI is very powerful as well. Currently, the RSI is still pretty strong and it's coming down. But what's even more useful, in my opinion, for the dominance chart is the weekly chart. And the indicators that you use could depend on the different charts, right? Sometimes the weekly chart fits best for this chart, but sometimes the monthly chart fits best for like other charts, right? So it all depends on the chart itself. For example, if the weekly RSI on Bitcoin dominance is really, really low, then I would be actually more worried about like the trend reversing the other way, right? So that's something I'm watching out for as well. And if we go back to the monthly chart, if we're making buying and selling decisions, we also want to see like the momentum shift here. Sometimes there's a dark red color that is shifting to the lighter red. It can mean that the bottom is in, right? Buyers are stepping in. This is a potential signal for a reversal. You can see on the flip side as well on the monthly chart is starting to kind of weaken. The color is shifting and then it comes back down, right? Of course, no indicator is 100%. We see a shift from like a dark green to a light green here, but then the market pumps higher and then we see ultimately another shift here and then the last shift here before the momentum actually swings back down. So sometimes there are a lot of false signal, but if there's a shift here, I want to be a little bit more cautious and not keep buying a ton of Ethereum if my goal is to make a shorter term profit, right? And again, this is very powerful, especially on the weekly chart as well. You can see when the MACD is negative here, it's starting to shift. Potentially there's buying pressure here. This did not sustain. And then there's another one here that ultimately became the actual bottom, right? And potentially we're seeing the top here, the local top for now. But we got to also take other factors into account, like the actual fundamentals, where we are in the market. For example, earlier on in the bull market, the pump did not sustain, right? The RSI is really high. The MACD is shifting towards the bearish side a little bit. Momentum is slowing down. Eventually, we did see a swing back down. And especially when there's a huge drawdown like this, a big MACD swing down, and it's sitting in a zone of support, that's often a great buying decision, right? Because even if I buy at $2,300, if I did not sell some Ethereum to de-risk a little bit, even riding it all the way back down is still a much better entry than buying all the way up here, right? So this kind of guides me like the buying and selling decisions. As investors, we want to try to get a good price on great assets. We're not trying to get like the best price, right? We're not waiting for the ultimate bottom. And if we want to realize some mid to short term profits, we can do so as well. We don't have to wait for the perfect top. And we don't want to be like holding every single token up and down either, right? Some people argue that, okay, you're a longer term investor, just buy and hold everything. That keeps everything super simple. That works as well on blue chip assets like, Bitcoin, Ethereum, just buy and hold. But if you're actually a more active investor, then we kind of have to make a little bit of a buying and selling decision, right? And again, these indicators are not perfect because there are a lot of fundamentals at play. For example, in the last cycle, FTS collapsed, which ultimately pushed the prices down much further as well. But you can see, even if I buy at these like negative momentum levels at, let's say, $2,000 here, and then I make another buying decision here at $2,400, and then I make another buying decision here near $1,000, I'm going to be getting a really good average price rather than buying into the bullish momentum, right? And this works for yield farming as well. If I am yield farming, let's say currently I'm in Pendle to Ethereum, I could pull up the Pendle to Ethereum chart here. So Pendle is relatively cheap compared to Ethereum, right? Is this the absolute bottom for Pendle to ETH? I don't know because I can't tell the future, right? But buying down here and entering into the pool down here is much better than like entering into the pool up here, right? Because if I enter in the pool up here, when the RSI is higher, the MACD is positive, the momentum is really strong. But if the price do drop back down, you're going to be losing a lot of Ethereum in the process, right? Because if you're buying Pendle at a high price, Pendle draws down really sharply. A lot of your Ethereum is getting shifted to Pendle. You're going to be sitting in a lot of Ethereum losses, right? This is not good if you're swapping from Ethereum and your goal is to make more Ethereum in the process. So again, when the negative momentum is there, the trend is starting to shift, then that is a great sign that, okay, maybe the price is bottomed out. Maybe the price will shift up in the next coming months, right? So these are all the indicators that I use. I keep it quite simple, but I also combine like a lot of different things. Like for example, okay, there's a big momentum shift here and it's sitting in a zone of support. So this is a pretty good entry. You can see I did enter a little bit earlier. That's completely fine. If I am bullish on the project, right? I believe that Pendle is going to do really well in the upcoming off season. Then I'm comfortable taking that risk because even if I'm wrong, I'm losing less money than if I enter all the way up here. Yield farming altcoins is not 100%. You're not going to close every position in a profit, but hopefully our profit is much more than our losses, and making smarter decisions like this could give you a better risk and reward. And with technical analysis, we want to kind of think in probabilities here, right? For example, we could see that Ethereum is holding above these two key moving averages on the weekly chart. It's kind of like holding above this $4,000 zone. Maybe this zone becomes an area of support, right? Which is really bullish when the resistance became support. And then if we zoom out to the monthly chart, the RSI is not overdrawn yet. So you could argue that there's much more room to run for Ethereum, and the interest rates are coming down, risk on assets are moving up. This basically sets a lot of bullish macro towards Ethereum's favor, right? So you got to use like technical analysis smartly in combination with like fundamentals analysis and kind of think about like the risk and reward that way. And if we zoom out here and kind of squint our eyes, what we actually see with the Ethereum price action is that it's kind of like an ascending triangle, right? Over a very long period of time, buyers are stepping in, it's setting a higher low. The resistance is still sitting around like this $4,000 to $5,000 zone. But once this breakout, we could basically see a huge price movement upwards. And again, we want to think in terms of probability. If I believe that Ethereum is going to move higher, I never want to assign like 100% probability, right? Which is why I share in my videos that when I'm yield farming right now, because the prices are really good, I'm selling a lot of my fees into stablecoins. The reason why I do it is because I'm hedging my downside. I want to be open to the possibility of being wrong, right? It's never good to be too confident in your analysis and you're going all in into like, one asset or everything. So that's my approach with yield farming and technical analysis. Those moving averages, MACD, RSI are what I use the most. Hopefully it helps you out. If you want to learn more about yield farming and investing, be sure to check out the other videos on my channel. I try my best to give you the best information possible so that you can become a better yield farmer and investor. Thank you once again for watching. I'll catch you next time.